Good morning, good afternoon, good night. Welcome back to another schema scalper video. Today we're going to be looking at swing projections and the golden -4 swing projection. So what exactly are we going to be looking at? So number one is solver bullet time, the PM session. So that's from 2 p.m. to 3 p.m. Number two, this is all going to be hindsight. This is just training for me. And this is how I usually do my study before I backtest something to see that it works. I want to see it actually working in hindsight. So it's hindsight. Then I do my backtesting on Replay Viewer or on Forex Tester, and then I'll do forward testing live markets and then put money into account and trade that strategy or have that idea and make use of the idea. So we're looking at Silver Bullet PM session. We're going to be looking at institutional swing points, and by institutional intermediate swing points, I mean a swing high or swing low that's formed inside a fair value gap. So that's the first thing. We're going to look at silver bullet time, so it's going to be specific time of day, swing point inside a fair value gap. And number three, we are looking for a projection of that swing to 4 standard deviations. Let's go. We're looking from, today's currently Sunday the 6th of August. We are looking at from Monday the 24th of July up until the last Friday or first Friday of August, 4th of August. So 2 p.m., 2 p.m., 3 p.m. So it's here. That starts to move. 2 till 3. Inside here we are looking for first of all fair value gaps. That's going to create an institutional swing point. This is all on the 1 minute chart. So I'm looking for fair value gaps, inversion fair value gaps. And I'm only looking for fair value gaps down because the market went down during this time. I'm not actually looking for like before the market goes down, confirmation that it's going down, all those things. I'm just looking at the, okay, I think I got it. I'm just looking at the actual moves. I'm not looking at the confirmation of the move or actual beginning of the move. So it's this time to this time. Delete that. Put another one here, 1 minute after. Now I'm going to mark up every fair value gap that is going down. First I'm going to do that. So it's right here. Mark it as regular. So here's another fair value gap. Okay, now we're looking at, I'm actually going to create a template now. Say, let's look at this one first. So it hasn't taken out the high of this fair value gap. The candle that creates the fair value gap. Let's just do the settings. I'll turn everything off. -4 is the only one I want on. 0, 1, -4, that's all I want. And I don't want prices on, I want levels only. Still not to the right. Nope. Trend line, I don't want to see that. Save that as intermediate swing point, intermediate term swing point projection. So this one gets projected down, so this would be the target. And now there's a low down here, so this is inside the range still. Hasn't taken out any liquidity, so I'll look at the next one. That's an intermediate swing high inside here. Now this candle gets violated, but the swing high is still intact, so I would still look at that one as potential run. This is the lowest candle up to the highest candle. Now we're going to look at that. Where is the -4 falling? -4 standard deviation. Wait. I did it the wrong way, so -4 is up there. Okay, let's do it. It's going down, so I'm looking at this high to this low. And -4 is here. And that marks, what is that, the low of the day. This marks the low of the day. Okay, I'll just use this, remove these lines. The low of the day. Okay, now we'll look at the next day. Tuesday 25th. Looking at 2 o'clock till 3 o'clock. This one, not 2, 3, 4 minutes past 3. Okay, that's fine. Market went up, I'll check for fair value gaps up, and then on this run down as well, I'll check for fair value gaps. institutional swing points. So every fair value gap up, fair value gap up. And look at that first. So that's the initial move, so it's right here. Okay. Just gonna put it under this fold. Inside here. Doesn't get violated. This one also doesn't get violated. Inside here. There's another small gap inside there, gets violated. So I'm only looking at now the ones that don't get violated immediately. There. Still that out until it's violated. Okay. I'm looking at this low. This low to this high. Four standard deviations, marks high of the day. Super close to the high of the day. Tuesday 25th. So if you have to blend this with ideas of liquidity, I'm sure there's something wrong. Something crazy that will happen. Something really crazy. And in this high to low, let's see what that is. Inside there, I'm using a rectangle instead of a foot. Yeah, let's see what is this. Here to here. And it's up here. Swing low, all the way to this high. Up here. Here. Swing low all the way up to the swing high. Up here. And then market breaks down. So we could have caught the potential high of the day inside here. High of day. I know what you guys are thinking. Oh, ski mask, you're just choosing this at random. No, I'm not. This is the first institutional swing point. So the first fair value gap that was filled and not violated in the direction of the move. I'll check the other one as well. First fair value gap that was filled and not violated. And the second fair value gap that was filled and not violated created the actual high of the day. Or low of the day, sorry. Yeah. So now I just need to look into and refine this. But this is really cool, really interesting to see how you can use projections on intermediate swing lows and swing highs. And that is the video for today. I hope you guys found something insightful out of this. I now only showed 2 examples. Going into the future, as I refine it, this is just my process of finding these things and actually testing it. And now it's time to go in and refine it and actually go and learn to identify and um, identify and actually see it happen in real time. And I don't want to say predict it happening, but yeah, try and predict it happening in real time. I hope you find this insightful. If you have any comments to add, comment section is always open. Just like the video. If you're new here, please consider subscribing. We'll be doing this every single week. We'll be going into a new pattern or a new way of looking for more accurate price runs and identifying high probability price runs. Cheers.